Hi everyone, welcome to weekly forecast Forex 23rd February to 27th February. So previous week also we gave a good forecast for the main currency pairs, and most of the traders achieve good amount of pips out of our forecast. So hope you will get a few additional pips as well in this week's forecast. So first we'll go to Euro USD daily time frame. It's trading in a bear trade below the main daily simple moving averages, as the market is rebounding from 34 months lows. But the forecast will be that Euro USD climb up within this week above 1.09. So there will be a moving up trend because we are at 34 months low. So let's go to the 4 hours time frame, and here you can see uh, a slight bearish candle has popped up in the 4-hour chart. The euro broke below a descending trade channel and bounced from 1.08 level. The market regained 50 SMA as bulls are creating a reversal up. The spot would need to overcome the 1.078 range uh, resistant to create a deeper pullback up towards 1.0923 and 1.0985 levels. Support is seen near 1.844. So there will be a movement up in Euro USD. So hope you will enjoy the pips in the coming week. So let's move on to GBP USD. We go to the 1 hour time frame for GBP USD, and here we have reported a bearish candle for GBP USD. The pair's action early this week dropped to its lowest level since November, as the pound failed to hold its own against the wave of USD strength. And it is our view that in the absence of a market improvement in the news regarding coronavirus, that the USD will retain its broad-based strength. That said, the outlook for GBP could reach various inflection points this year, which could spark sharp movements in the currency in either direction. The pound dollar daily chart will move into daily chart, and the daily chart has turned bearish for the pound dollar, and the downside momentum has strengthened, and the GBP/USD dropped below the 100-day simple moving average as well. So the relative strength index is well above 30, so far from the oversold conditions, so there will be bearish patterns in the GBP/USD. The pound dollar also slipped below a moderate downtrend support line extending from the late December through at 1.29, so to the mid-February low of 1.2875. The next big target is 1.27 range, up to this range, which is where all important 200 SMA cover converges with the swing high from early October 2019. The initial support awaits at 1.2820, which was a low point in late November. It is followed by that month's draft at 1.28. See, 2820. Below 1.27 mentioned earlier, the next cushion is only at 1.2590. So there will be a bearish trends in GBP USD. You can open sell position at this moment, so you can earn a good amount of pips out of GBP USD. Next, move on to USD JPY currency pair. So you can see a bearish candle has been pop up in daily time frame. USD JPY falls on Friday's week US data, but remains higher on the week. Market services PMI service unexpected drops into contradiction in February, and poor Japanese economy data spurred the yen fall during previous week. So in the coming week, our forecast will be GBP USD will be touching 101.31. So there will be room for bearish traders, and we are at a very high level, and we are at overbought condition. So there will be bearish trades. So make a sell position and have a good amount of whips this week. So all the best, guys, for the coming week.